When you get a mortgage, you will most likely set up an escrow account. Some lenders require you to have an escrow account with certain loan programs. An escrow account can make saving for your taxes and insurance more convenient because those payments are included in your monthly mortgage payment, making it easier to put aside the money that is paid annually for your taxes and insurance. The question is, what if you don't want to have an escrow account? Can you get an escrow waiver? Well, in this video, we're going to talk about escrow waivers, the risks of not having an escrow account, and how to get an escrow waiver. Most lenders require you to have escrow accounts, especially if you make a low down payment or have little equity in your home. But if you put a larger down payment, it is sometimes possible to get a mortgage without an escrow account, or to have an existing escrow account removed from your loan. To do this, you'll need to qualify for an escrow waiver. So what is an escrow waiver? Lenders utilize escrow accounts to ensure that your property taxes, homeowner's insurance, and, if applicable, other types of insurance are paid. If you have an escrow account, your annual insurance premium and property tax bill will be spread out across 12 equal payments and included in your monthly mortgage payment, in addition to any principal and interest that you pay on the mortgage itself. Your lender will take this part of your payment and put it into your escrow account to save for when these bills come due, at which point they'll pay them out of the escrow account on your behalf. Generally, this setup is beneficial to both you and the lender. Escrow accounts protect the lender by ensuring that your taxes and insurance are paid. The benefit to you is the peace of mind knowing that those payments are set aside, so you don't have to worry about making these payments in one lump sum. However, if you prefer to handle these payments on your own, you can see if you can get an escrow waiver. While lenders typically require borrowers to have an escrow account, an escrow waiver renounces this requirement. How do escrow waivers work? If you're granted an escrow waiver, instead of having your taxes and insurance included as a part of your monthly mortgage payment, you'd be responsible for paying each of your bills in one full lump sum as they become due. Your lender won't make these payments on your behalf, and instead of paying a little bit of your total amount due each month, you'll owe the full amount all at once. This can be useful or risky, depending on how good you are at planning ahead. You might prefer to hold on to the money yourself until it's due so that you can keep it in an interest earning account. However, if you fail to save money ahead of time, you might be in for a big shock to your wallet when it comes time to pay. Your escrow waiver is contingent on you continuing to pay these bills. If at any point you become delinquent on your taxes or insurance, your lender will most likely revoke the waiver and require you to pay into an escrow account as part of your monthly mortgage payments for the life of the loan. What are the requirements for an escrow waiver? Whether or not you'll qualify for an escrow waiver will depend on many different factors, including your loan-to-value ratio and the type of loan you have, the type of property you're in, the lender's rules regarding escrow waivers, your state's laws, and the details of your individual loan. If you're able to get an escrow waiver, you may need to pay an escrow waiver fee, which is equal to a small percentage of your loan amount. Whether you're eligible for an escrow waiver will depend on a variety of factors. Check with your lender to find out their escrow requirements. Your state may also have laws dictating how and when escrow waivers can be granted, so you may be subject to additional requirements. You may be the type of person who would rather save the money you're paying into your escrow account and place it into your own interest-earning account, where it can accrue cash until you have to pay your bills. If you prefer to be in control of your property tax and insurance payments, or if you have a fluctuating income and need the flexibility, if you prefer to be in control of your property tax and insurance payments, or if you have a fluctuating income and need the flexibility, it might make sense for you to seek an escrow waiver. What are the cons of an escrow waiver? If you want to forgo an escrow account, you need to be good at saving your money. You also need to be aware of what you need to set aside each month so that you are prepared. When it's included in your monthly mortgage payment, that saving happens automatically. Having an escrow account can be really convenient. All you have to do is make your full mortgage payment each month, and your lender takes care of putting the necessary funds into escrow and then paying out of that account when your bills come due. Without an escrow account, you'll need to take care of this all by yourself, including keeping track of your payments and when they are due. The bottom line is that an escrow waiver puts you in control of making the payments for your taxes and insurance. Before you ask your lender about an escrow waiver, be sure you'll be able to handle budgeting ahead of time for tax and insurance costs on your own. Foregoing an escrow account can be beneficial for the flexibility it provides, but it can also be a risky choice if you don't plan ahead. Be sure to weigh all the pros and cons and discuss with your lender whether you qualify. Thanks for watching. Be sure to work with a licensed mortgage professional and get your questions answered.
Hi, I'm Roni, dedicated to meeting your mortgage needs and making home dreams come true. Thank you for taking the time to watch my video.